Okay. Awesome. I believe well, not quite yet. Oh, hold on.
Almost live?
There we are. We are live. So thank you everyone for joining us today. I am thankfully joined by our host today, Rachel Stedman, who many of you have known. She's been with us, hard to believe, but quite a while. I won't say how long because I don't want to give away her age. Um, but she is an amazing resource. We're lucky to have her share with you guys today some of the tips for this year's tax season. Because once again, we're at that time of year, and there's been some changes, not as many as in previous years, but there's always some updates. So Rachel's done the deep dive and is ready to share with you the updates from this year, as well as go over the basics of what you need to do to get your personal tax returns ready to go. So without further ado, Rachel, you want to take it from here?
Yes, thank you so much. And Andrew, I know you were doing a little bit of housekeeping, but if you could just enable sharing for me, I'd appreciate that. But I can also proudly say that this year has given me my 21st year since I've been with the organization. So I say that very proudly, that I have been with the firm. And yes, it is that time of year again where we need to discuss everything that's new for the 2025 personal tax preparation. So we're going to do a bit of a deep dive in terms of what are the new announcements from CRA? And then, of course, I'm going to go into a little bit more details just in terms of, why individuals should be processing their personal tax return. What are the different deductions you can write off, and what are the different tax credits that you also write off? Okay, so without further ado, okay, so let's go ahead. So, Andrew, can you confirm you're able to see my screen? Okay.
Yes, I can.
Okay,
Yeah.
perfect. You are able to? Okay, give me one
Yes, ma'am.
second. Let me just make sure. Let me try that one more time. Just want to make sure that I'm able to share the proper details with you guys. Okay, fantastic. Okay, so thank you very much again. So, just a little bit of information in terms of what we're going to touch up on for today. We're going to do a bit of that deep dive on what's new. For 2025. We're also going to touch upon as well some previously announced or I should say measurements to keep in mind. And as well, do you have to do your tax return? That question that everybody likes to ask, which is a yes, and I'll explain to you why. We're also going to touch up on the important deadlines for the personal tax return preparation, as well as the different CPA 4IT tools that we provide. So it does help individuals organize their information in order to be able to submit to us for the tax filings. And also, again, going through how you should prepare your information, what to organize, how to upload it to our firm. So we're definitely going to touch upon all of that. And then, of course, what everybody needs to know or wants to know, when will I get my tax refund? Okay, so just going into a little bit in terms of our mission, okay, at CPA 4IT, our mission has always been in helping entrepreneurs organize their finances, create wealth, and transform that wealth into a legacy. So we're definitely here to help clients from day one who are looking to incorporate their business, organize their business in terms of their maximizing on their deductions, creating that wealth, and of course, looking to see not just where you are today, but 5 years, 10 years down the road. So really transforming that wealth into a legacy. And some of the ways that we do that is through these different webinar sessions to really give you that bit of that guidance in what are the things that you need to be aware of. So without further ado, just to kind of dive in. So what's new for the 2025 tax year? One of the first things that is important for individuals to note is that the CRA has reduced the tax rate, the lowest tax rate, from 15% to 14.5% as of July 1st. So they've called this a middle class tax cut. And with this particular savings for individuals, or this tax reduction, I should say, an estimated individuals should see a reduction in their, or I should say, a savings in their tax of $420. And then for a family income, you're looking at that bumps up to about $840. Next is there is a new top-up tax credit. So this new top-up tax credit has been created because of that reduction of the lowest tax rate from 15% to that 14.9. So this new temporary non-refundable tax credit is for 2025 to 2030. And it is designed to ensure that taxpayers with significant or high value credits, such as medical or tuition, do not lose value due to the lower 14.5 non-refundable tax credit rate, again, which is down from the 15%. So it does bring the rate back up to 15% for that non-refundable tax credit. And this rate is up to 15% on amounts that are over $57,000. Next change for this year, the basic exemption threshold has increased to $16,129. So again, this is a increase that CRA does on a yearly basis. Okay, so this is the essentially the amount of income that you can earn before paying any federal tax. So again, or what we like to call essentially how much income you can earn tax-free, okay? And this is up by $424 from last year. Next is the tax brackets have changed to account for inflation. So again, this is something that every year the government does adjust that tax bracket to help maintain taxpayers' buying power as the prices of goods continue to increase. So the outcome of this tax bracket change is that if your income, I should say, has not changed year over year, but you were just a little higher than, or I should say above in the next tax bracket, the adjustment could mean that you would fall into a lower tax bracket this year, and essentially you are looking at also some tax savings there. Next is the rise in the RRSP contribution to a maximum of $32,490 for 2025. So again, if you have any RRSP, typically you can contribute up to 18% of your previous year's income to a maximum of, again, that $32,490 for 2025. So again, that's also an increase of $930. That means that's the additional amount that you would have been eligible to contribute into your RRSPs for the 2025 tax year. Next, CRA has launched the Canada Disability Benefit. So as of June of 2025, this is a new federal benefit, and it is for working aged Canadians between 18 to 64 with disabilities. And they will receive up to $2,400 per year. So to qualify, of course, you must be certified to receive a disability tax credit. And the federal government has planned to table legislation to make this disability tax credit tax exempt. So currently you will be eligible or you will be required to pay taxes on that. But we're hoping in the future that once that legislation has passed, that this becomes a tax-free earnings for individuals. The next change is that there's the end to the digital news subscription tax credit. So you can no longer claim this non-refundable tax credit, which was previously offered to taxpayers up to a 15% credit and up to $75 per year for buying any subscriptions to qualified Canadian journalism organizations. So although this is no longer eligible as a non-refundable tax credit, if you are self-employed, however, you might still be able to claim this digital subscription as a business expense if you do use these subscriptions to keep up to date with industry news. And lastly is the change to the Canada carbon rebate payment. So in March of 2025, the federal government removed the carbon prices from gasoline. As a result of this, the tax-free Canada carbon rebate payments, which typically helped individuals and families cover the cost, this final rebate was paid in April to individuals who filed their 2024 tax returns. Okay, so if you're up to date on your 2024 tax returns in 2025, you would have received that last payment in April. However, if you have not yet filed your 2024 tax returns, the CRA has put into the budget that no rebate payments will be made for any tax returns or adjustments filed after October 30th of 2026. So you want to make sure that you get all those tax filings up to date, because if you're a late filer and you're coming in to file those tax returns after October 30th of 2026, when you would have been eligible to get this rebate payment when you filed on time, unfortunately, you will be no longer able to receive those payments. So also, we're going to touch up on some previously announced measures that we want you to keep in mind for the 2025 tax year. So the first one is that the Canada Pension Plan, the CPP, has made changes to the YMPE, which is 71,300, and YAMPE, which is $81,200. So I'll explain what those acronyms are. So essentially, the CPP contributions have increased as a way to have CPP enhancements designed to increase future retirement benefits. And CRA is looking to increase that by up to 50%. So the YMPE is the first earnings ceiling for the year's maximum pensionable earnings. So that means that up to $71,300, that is where you're looking at that first earnings maximum. And the contribution up to that 71,300 is 5.9%. Okay. And anybody earning between that 71,300 to 81,200, that is what's called the second earnings ceiling year's additional maximum pensionable earnings, and that percentage is 4%. So once you reach over that 81,200, you are exempt from any additional contribution into the CPP. However, for individuals that are self-employed, so the incorporated companies where they're paying themselves income from the corporation, you are subjected to pay both the employer as well as the employee CPP. So while the contribution rates are 5.95% for the first ceiling and 4% for the second ceiling, unfortunately, if you're self-employed, that is doubled. So which means if you're self-employed, your first ceiling is 11.9% and your second ceiling does jump up to 8%. Okay. But again, just as a reminder, you're only paying that up to the $81,200 ceiling. The next thing to be cognizant of is the Old Age Security OAS recovery threshold clawback, which begins at $93,454 of taxable income. So the Old Age Security is income tested, meaning that benefits may be reduced if income exceeds a certain threshold. So for 2025, clawback begins at $93,454 of taxable income. But if your income, if you're aged between 65 to 74 years, and your income, your taxable income is over $152,000, the OAS is fully eliminated for you. And if you're over 75 years and your taxable income is over 157,000, then again, the OAS is fully eliminated. So if your income exceeds the thresholds, the OAS repayment will occur during the July 2026 to June 2027 recovery period. Next is the tax-free savings account. So the TFSA contribution limits is unchanged and remains at that $7,000 annual limit. Okay. So for the 2026, the maximum cumulative contribution room is $109,000 for eligible individuals. And just as a reminder for the TFSA, any investment income earned inside of your TFSA is tax-free, although the contributions are not tax deductible. So meaning if you contribute $10,000 into your TFSA, that $10,000 is not a deduction to reduce your income taxes. You will be subjected to paying your personal taxes based on the bracket that you fall into on that $10,000. However, anything that you invest and any investment income that you receive on that $10,000, you will not be subjected to receive any T5 slips where you will be required to pay any investment income on that earnings. Next is the home buyer's plan. The HBP withdrawal limit, again, that is unchanged and remains at a $60,000 limit. So the first-time home buyers, again, you can withdraw up to that $60,000 from your RSP tax-free to purchase a home. In terms of the repayment rules, you must repay this over a 15-year time frame. Typically, the repayment is after 2 years of the withdrawal. However, between 2022 and 2025, CRA did extend that repayment to actually begin. They're deferring that repayment to begin until the 5th year after the withdrawal. Next is the First Home Savings Account, so the FHSA. That limit also is unchanged and remains at $8,000 annually and at a limit of $40,000 for your lifetime. So the FHSA contribution, like the RRSP, is tax deductible. Okay. And qualifying withdrawals for the first time home are also tax free, like the TFSA. So it's a bit of a balance of both, a little bit of benefit from the RRSPs as well as benefit from the TFSAs. And although you are allowed a room at $8,000, you can only carry forward $8,000 of unused contribution room. Okay. However, the account must be opened in order to be able to accumulate that room. So for a lot of individuals, we do advise if it is your intent sometime in the future to purchase a home, it is in your interest to look into tap into the FHSA. Okay. Now, moving on to, of course, that question, the million-dollar question that everybody typically wants to know, do I have to file my tax return? So the long and short answer is yes, you definitely, we do advise individuals that you should be filing your tax return. When we look at the tax filings as a whole, the tax filings really are broken down into three components: the income, the deduction, and the credits. Now, I know many times individuals think, well, if I have no income, then I'm not required to file your income taxes. So while you may not have any income, so hence you're not subjected to any taxes payable to CRA, individuals can still have deductions. And there are certain credits that you are still able to tap into even if you don't have an income. So we still very much advise clients to ensure that you are filing the tax returns. So in terms of when we're breaking down what that income is, so the income is the total amount of money you earn or receive during the year that may be subjected to tax. Deduction, on the other hand, are the amounts you can subtract from your total income to arrive at your taxable income. So it reduces the money that is subjected to taxation. Okay. And tax credits, on the other hand, they do reduce the actual tax you owe, but not your income. So they are applied after taxable income is calculated and taxes are determined. Okay. So when we're going into more of that breakdown of what is the income. So the income can be anything from employment income, self-employed income, investment income, rental income, pension income. So those typically would come in the form of, if it's employment income, where it could be T4s, T4A, T4E. Okay. Of course, self-employed income. So that's typically when you're operating a sole proprietorship. The investment income is typically when we're looking at you receiving any T5s or T3s or T5008s. Okay. Rental income, of course, that will also be for not only long-term rentals, but even if you're doing short-term rentals such as Airbnb or Verber, those also do count under the rental income. And as well for your pension income, you're typically looking at T4 OAS or T4 RIF, T4 RRSPs. So these are all the different types of income that you would typically be reporting to the Canada Revenue Agency. When we're then looking at the deductions, so the deductions really fall under two types or two categories, as I like to call it, the personal deduction and then the business deductions. So the personal deductions would be anything from, again, like your RSPs, your FHSA. Those, however, do have contribution limits. So you always want to be very cognizant of what those limits are when you are making those contributions and what that deduction is. Other deductions would be anything from childcare expenses, employment expenses. So that's typically if you're an employee and you are receiving a T2200. So very important for individuals who are receiving a T2200. In order for you to be able to claim those employment expenses, you must receive, or your employer must complete a T2200 and provide that to you in order to allow you to deduct employment expenses from your income. Then when we're looking at the different category of expenses, which would be the business deductions, that's everything from self-employed or investment or rental expenses. So some business deductions can offset your personal income, even if you have no business income. And even when we're looking at those rental expenses, very important as a reminder for individuals who are operating these short-term rentals, such as Airbnb, a CRA will deny any income tax deductions for expenses incurred on short-term rental income in the provinces that have prohibited short-term rentals, or where short-term rental operators are not compliant with the applicable provincial or municipal licensing. So if you want to make sure that you are able to claim those short-term rental expenses, it's very important that you are adhering to the requirements of that short-term rental. Now, even when we look at deductions, again, going back to, again, that constant thought of, well, if I have no income, then I don't need to file an enough tax return. I won't be eligible for any expenses. That is not the case. There are many times that individuals may be operating a sole proprietorship business where maybe for that particular year, you've not generated any income, but you still have those expenses. You still have some expenses that you would be able to deduct, some of your home office or other direct expenses associated to running that business, where you can still claim those deductions. In some expenses for the business, if you have employment income as well, some of those business expenses you can offset off your employment income, whereas some of the expenses such as your home office or automobile, you will be able to carry that forward into your next tax years. So if you generate self-employed income in the future years, you carry forward those deductions. And also the same rule of thumb comes into play for your rental expense. So you may have a situation where you have a rental property and maybe for the year you have not been able to generate any income, or maybe again, your income is very low in comparison to what those rental expenses are. You still want to be able to claim those expenses because if there's a loss where the expenses exceed the income, again, that does offset off any other personal taxable income that you do have. So again, still definitely the benefit of filing the tax return, even if you don't have those any income coming in. Now, when we look at the tax credits and the tax deductions, they are not the same, okay? Tax credits reduce the actual tax you owe, not your income. So in other words, they are applied after your taxable income is calculated and the taxes are determined. So the tax credits also fall under two categories, which are the non-refundable tax credits and then the refundable tax credits. So what that is the non-refundable tax credits, again, they can reduce the taxes owing, but they cannot actually generate a refund for you. So in other words, they can reduce your tax liability to zero, and in some circumstances, any excess credit can be carried forward into the future use. So, for example, when we look at what those non-refundable tax credits are, they can be anything from tuition, student loans, medical, home accessibility, charitable donation, political donation, and many more. So in a situation such as, for example, your tuition, so these are one of the expenses that you can typically carry that forward into the future. So for, again, where individuals may be students and they are not generating any income, but you still have tuition. So in order for you to be able to have those tuition credits to utilize in the future, you want to make sure that you are filing the tax return. So you're reporting that tuition so that that tuition can accumulate over time. Okay. Now, while there are also things like tuition or student loans, which your income have no bearing, or your charitable donations or political, your income has no bearing on your eligibility to be able to capitalize on these tax credits. Certain things such as your medical expenses, for example, it is contingent on what your income is. So, for example, you can only claim medical expenses if your medical expenses are over 3% of what your income is. So, if you're, for example, generating over $100,000 and you only have a few thousand dollars, $1 or $2,000 worth of medical expenses, since that's under that 3% threshold of what you can claim, unfortunately, you would be denied any tax credits for that type of expense. Now, when we then look at the refundable credits, okay, they can actually generate a refund even if no tax is owed. So this is also very important for individuals, again, even if you have no income, even if you have no deductions, based on your income, for example, a lot of income criteria falls into play for the refundable tax credits. You are eligible for these. So these are everything from the Canada Grocery and Essential Benefits, which was formerly called the GST-HST. There's also the Canada Workers Benefits, the Canada Child Benefit, the Ontario Trillium Benefit, as well as the Disability Tax Credit. So a lot of these are contingent on your income. So typically for individuals who are generating anywhere, I would say between a $40,000 to $45,000 and under, you tend to be eligible for a lot of these credits. But once you start to be in a little bit of that higher tax bracket, unfortunately, you're automatically, your criteria, your eligibility for these credits are automatically gone. So that's why in these instances, again, even if an individual, let's say again, you are a student, you have no income, maybe you have some tuition, there are these refundable tax credits that you can still tap into, but you can only tap into these if you are indeed filing your tax return. One thing I do want to, however, note, just very important, more so for the 2025 tax year, one of the particular deductions you want to pay attention to, which is the charitable donation. So that is the non-refundable tax credit, is due to the Canada Post strike back in 2024, towards the end of 2024. For the 2024 tax year, CRA allowed individuals to deduct up to 14 months worth of charitable donations. So, which means you were able to declare your charitable donations from January to December of 2024, as well as your charitable donations for January and February of 2025. And you were also able to claim those 2 additional months in your 2024 tax year. So for individuals that did capitalize on including the January and February 2025 donations, charitable donations in their 2024 tax filing, you want to be very careful this year when you're compiling your information to note whether or not you did claim that January and February donation in the prior year. So which would mean for the 2025 tax year, you would only be able to deduct anything from March to December of 2025. So you'd only have that 10 months worth of charitable donations that you are allowed to deduct. So again, just very important for individuals that capitalize on that. Last year, what we typically advise clients is if you know that you're typically an individual that's an ongoing donor, we typically said, hey, just remain declaring only the January to December for 2024, and then anything from January of 2025, just leave it for the next tax year. So that's the only point that individuals need to pay a little bit more attention to. So now, when we look at some of those important deadlines, so the deadlines have not changed. The deadlines have always been the same, okay? So for the personal income tax filing deadline, okay, for individuals that are filing US tax returns, your deadline is April 15th of every tax year. For individuals filing the Canadian personal tax return, your deadline is April 30th. And for individuals that have to pay any taxes to the Canada Revenue Agency for the personal taxes, again, that deadline is April 30th. So these have been unchanged. If you are self-employed, however, the dates are a little bit different. So the sole proprietorship tax filing is actually due on June 15th of each year. And however, the ironic thing is that the tax payments to the Canada Revenue Agency are due on April 30th. And it's the same for your GST HST for sole proprietorship. While the filing is due on June 15th, the actual payment for any HST is due on April 30th. So essentially, this is a bit of a conundrum because while you're filing your tax return and you might say, hey, well, I have until June 15th to make that filing. How will I know how much money to make the payment on April 30th? Which, of course, if you're waiting until that June 15th deadline, you won't know what that amount is. So that's why we do encourage clients, although your deadline is a little bit further out, we do advise individuals that are self-employed still try to have everything ready and completed by the April 30th so that we're able to calculate what the amount of taxes are payable to CRA and you can make that payment by April 30th. If you're in a situation where you have been required to make installment payments to CRA, and your income is approximately the same, your income, your expenses is approximately the same year over year, then there is an expectation that your installment payments would have covered the majority of whatever is owing. But if when we come to file your tax returns for the sole proprietorship by June 15th, we are able to identify that there is monies owing to CRA, you will only incur interest from that May 1st up until that June 15th timeframe. And if you still have not filed or paid by that June 15th timeframe, then unfortunately you are hit with penalties. So we always really like to emphasize to clients that it is important that you are ensuring that you're filing your tax returns on time as well as making the payments on time, so that it avoids you having to be making any late interest payments to CRA or late filing payments to the Canada Revenue Agency. As I like to say, don't donate any additional money to CRA that you don't necessarily need to. So next, we're going to touch up on some of the CPA4IT personal tax tools that we do use to really help individuals get organized. Okay. So one of the tools that we do provide for our clients is the CPA4IT personal tax info sheet. So every year we do send out that info sheet to clients that we're asking clients to complete to make sure that they're keeping us up to date with their address, their marital status, any information significant to themselves, such as whether or not you have any foreign property or if you have any dependents. And I will walk you through a little bit in terms of what that info sheet looks like. We also do provide the CPA 4IT personal tax checklist. So that's that checklist where we're itemizing all of the different deductions and all of the different credits that you would be eligible to tap into. So while I did kind of go through them a little bit and just touch up on some of the primary deductions, we do go in a little bit more detail with what those different deductions to ensure that you're making yourself aware of what deductions are available and see whether or not you are eligible for those. Then we also do have a statement of real estate rental worksheet. So we have actually several worksheets. So we have a worksheet for real estate, for self-employed, for T2200, charitable donation, charitable and I should say charitable and political donation, and the medical expense worksheet. So the purpose of these worksheets is to really help clients organize your expenses and your deductions for the tax filings. Okay. So the more organized you are in terms of ensuring that you are itemizing what your income is and itemizing the deductions, the better will be for you to be, again, on top of what your deductions are, as well as the better it is that you are providing us the information. So there's certain nitty-gritty details that we don't need to necessarily inquire on if you're able to complete these worksheets and give it to us in quite details. I will also touch up on what those worksheets look like. So actually give me one moment and I will actually bring that up right now so we can see what are these worksheets that I am making reference to. And here we go. Okay, and here we go. Okay, so when we're looking at the what the personal tax checklist looks like, or I should say personal tax info sheet. So again, here's where we're asking clients to provide information to us, such as, of course, your email address that you're utilizing for CRA. So while we do recognize that many of our clients that we do the tax return for, they have businesses, some individuals have a different email for their business than they do have for their CRA access. So want to make sure that you're providing us that information. Again, we want any updates, such as any of your telephone number or your address changes. So while it is important that you are notifying us of any changes to your address, unfortunately, we cannot make an address change to CRA on your behalf. So we typically advise clients that it is important that you are having access, first of all, to your CRA account, that you log into your CRA account and then you make any of these updates. Because typically when we're e-filing your tax returns and there is a discrepancy with the address in the CRA and the address in the tax return that we are completing, we are not typically able to e-file the returns. So it is, again, very important that you ensure that that information is updated. For the tax filing details, again, we also do ask information such as, how many tax returns are we completing? Is it yourself? Is there a spouse? Are there any dependents? Also, the info we request is information that CRA is asking year over year. So many times I have a lot of clients that say, I completed this information last year, nothing has changed. I live at the same place, my expenses, my everything are the same. While that may be the case, a lot of times CRA is asking new questions year over year. So it is still important and mandatory that clients complete this information. Okay. As well, again, including some of that information would be whether or not you've moved. So, for example, your residence has changed, if you've immigrated into Canada, so if you've entered Canada, exited Canada, um, if your status has changed in terms of whether you were became married or you were separated, any of these little things, or I should say your marital status has changed. For your personal information, again, most of these details we do pre-populate what last year's information is, but again, we want to have clients have the opportunity to provide us any updates, okay? Also provide us any of spouse's information if applicable, family details, so dependent information if applicable. And then we also ask clients to complete the personal tax scenario or the deductions. So to kind of check that off. So whether or not you're providing us with any T4 slips, if you have any RSP contribution or donations. So it's just allowing us to know what are the different deductions that we are going to be recording for you on the tax return for this year. Okay. And we also do provide the link to our clients for all the different tax tools that I was making reference to. And again, I will show you that in a minute. And if you are a sole proprietor, we also do ask you to provide us that information. And if you're newly incorporated, also your incorporation details so that we are aware of that. Okay. So this is what we do ask clients to complete on a yearly basis. Okay. And then in terms of the personal tax checklist, again, so this is where we're providing clients with all the details of all the different deductions that are available to you. Okay. So we do ask clients to peruse, go through everything, see what is applicable to you. And then that really does help you in terms of knowing what you need to compile and provide to us in order to be able to file the tax return on your behalf. And then in terms of the worksheets, so again, the purpose of these worksheets is really to help the clients organize the finances. So part of our mission, what we really want to help clients do. So with the worksheets, again, it is a fillable Excel where clients are able to download and you will complete all the information, whether it's for the real estate worksheet or it's for the medical worksheet, self-employed. So we do provide the information over to you so you are able to, again, summarize and provide us the details of all of the income and the expenses that are applicable based on the worksheet. And then you can provide that information over to us for the tax return preparation. Next, so I am going to dive into the next one, but I see someone has a question. So if you don't mind, I'm just going to kind of tap into those questions. So what happens if I don't complete the personal tax checklist? So the personal tax checklist is just the info. I know and I understand that this maybe sounds a little misleading. It's the actually info sheet. If you don't complete this info sheet, but you've provided us everything else, you've uploaded everything to us, you've provided the worksheets, we will still reach out to you and ask you to complete it because, again, it is very important, right? It could be anything as simple as, maybe in prior years you were not a Canadian citizen, now you're a Canadian citizen. We have to update this information when we're doing the tax filing. So if you don't complete this information, there is a likelihood that we are providing inaccurate information to CRA. So we do insist on that. So if you provide everything else but this, we will still reach out to you and say, hey, we need you to please complete this information and provide that to us.
And for clarity, I mean, the reason we do the worksheet is to help reduce the time spent in the file to help keep the
That
cost down.
too.
And so if you don't complete the worksheet, that means someone is going to have to go and look at it and then give you a call and charge you for all of that time. So if you don't complete that worksheet, your costs are going to go up and you're still going to have to complete the worksheet. And if you cannot access a computer for whatever reason, our team will go through that worksheet and they'll complete it on
Yeah.
your behalf with you on the phone. So it's not like it can't be done without it, but that information is mandatory in order to complete the personal tax return. So the easiest way to get it to us is through that worksheet. If you want
Hmm.
to speak to a human, absolutely, we've got a human available to take that information and put it into the worksheet for you, but I'm sure most of you don't want to pay for that.
Very true. Very, very true. And that is very important because, we've seen situations where clients have uploaded 2025 receipts. So, for example, they may, let's say it's prescription receipts, and then we have to download everything, and then we do need to um, tabulate everything. So, yes, so that definitely does add on in cost. Now, even in particular with the medical expense worksheet, I say to clients, look, there are always easier ways to be able to gather that information. Okay. So, for example, if you know you have one particular place that you typically go get your prescription, you can go to the pharmacy and say, hey, can you print me out a statement of what my prescription cost is from January to December, right? And then it will also provide for you how much you paid versus how much, if you have, for example, insurance, how much your insurance paid. It's the same thing for dentists, for example. Again, you can get that annual statement where it gives you, okay, the total amount is X, okay? Other things, let's say, for example, if individuals are having paramedical expenses, so the occasional massage or acupuncture and different things, if you know you have insurance and you're submitting those claims to the insurance, you can log on to your insurance and download your information on a calendar basis of what is the total amount that you submitted, and then what is the total amount that they covered versus what your out-of-pocket cost was. So there are definitely easy ways to be able to access this information and then just simply put it into the worksheet to really help reduce the cost of us having to compile the information. And more so, I think for the medical expenses, why this is important. Because for medical expenses, as we kind of talked about earlier on, it is one of those tax credits that you're only eligible for it based on what your income is. So what we don't want is that you've provided us all of these physical receipts, 20 physical receipts, and we're having to tabulate everything just to find out we've spent time doing this. And meanwhile, based on your income, you're not eligible to deduct any medical expenses. So now we've spent time on this where you don't even get any benefit from that. So yes, it's meant to help you organize you and reduce your cost as well. Very important. Thank you very much, Andrew, for adding that in as well. Okay, so next we're going to touch up on, so I'm going to quickly head back to our PowerPoint so we can continue on. So bear with me one second. Let's stop the screen share. Okay, so moving on to the next component. So we're going to touch up on a little bit of how should you prepare your tax return? So what information that we would like you to provide to us and how you should provide it over to us so that we are able to submit that tax return to the Canada Revenue Agency on your behalf. Okay. So when we're looking at the different steps that you typically want to ensure that you're going through. One of the first things is that you want to make sure that you are collecting all your information. Okay. So that's when we're looking at, again, that personal tax checklist to see what are the different things that I am allowed to deduct, okay? Or what are the different income that I need to provide over that's applicable to you, okay? So you want to start collecting all that information and all of your supporting documentation for your income, as well as your deductions and credits that you plan to claim, okay? Then the second step is to ensure that you are selecting the software that you want to use to fill out your tax return. So whether you're looking to utilize our firm to do that, or if you're possibly looking to be doing that on your own, these are different options that are available. You want to make sure that you know what you're going to be utilizing for the tax return preparation. Then you want to make sure all of your personal tax return information is up to date. So again, as we mentioned, where we want you to ensure that your address is up to date with CRA. So your address, you would want to update certain things like your marital status or when you immigrated into the country. Those are updates that you're typically done when you're doing the tax return filing. So it's just really primarily your contact details that you want to make sure that CRA has up to date. Then you want to make sure that, again, you are reporting all of your income. So when we talk about that income, what is applicable to you? Employment income, self-employed income, whether it's rental income, investments, all of these things, you want to make sure that you're reporting that. Okay. Then also when you're checking the checklist, you want to find which deductions and tax credits and benefits you can claim. So again, also utilizing the different worksheets to ensure that you are able to input that information for the different deductions. And once you have tallied all that information and completed all of your worksheets, you want to be able to provide that to our firm so that we can complete the data entry for the tax return and have that information sent off to the Canada Revenue Agency well before your deadline. Okay. So for clients who are typically getting a refund, I like to say, hey, why not get the tax returns done earlier? You can get that refund a little bit earlier. For clients who have money owing, again, same thing. You still want to be able to make sure that you have, you know how much money is owing to CRA and you're not waiting to provide us your information just a few days before the deadline just to be scrambling and then you're not making the April 30th deadline to make that payment. So you want to be able to give yourself sufficient time to know how much you owe and be able to make that payment. And most important, you want to make sure that you're keeping all of your supporting documentation. This is key. Okay. Certain things like income, such as T4 income or T5 income, these are things that are submitted to CRA. Deductions such as your RSP, CRA already knows what those deductions look like. But when we're looking at certain things such as you have childcare or you have tuition, these things where you're eligible for different tax credits, CRA does not, that information is not submitted to CRA by any third party, by an employer or by any institution. So it is important that you make sure if you're claiming these different things that you are keeping your supporting documentation as you can be audited by CRA. And what you don't want to have is that down the road CRA is auditing you and they're asking, hey, we want to see what these different deductions are. And then you don't have that. And then CRA is going to deny all of those deductions. Okay. Next, we're going to touch up on when will you receive your notice of assessment. Okay. So, over the last few years, CRA is really phasing out, you know, anything to do with mail. Okay. Paper applications for tax returns or mailing you any notice of assessments or any reminders or payments or monies owing to CRA. So typically, the best way to be able to have access to your notice of assessment is by having access to your CRA account. Okay. Typically, your notice of assessment, you will typically get it within about a 2-week time frame. CRA is over the last few years is becoming a little bit quicker on being able to access that information or provide that information to taxpayers. Although we have noticed within the last 6 months or so, CRA has been a little slow on processing many things. But just in general, you can typically get your notice of assessment within a very quick turnaround time frame through your online CRA account. And then even when we're looking at, hey, how much money am I going to get in my refund and when am I going to get that refund? Or, how much money do I owe to CRA? And, has that payment been applied to my CRA account? Okay, going back to it is important that you have access to that, your CRA accounts. Your refunds, typically you're looking at anywhere between, again, 8 to 14 days. We typically advise clients, it's very important if you have your online CRA access, go in and include your banking details there. That way you are able to get your refund much quicker than them having to mail out a check to you, and that might take an extended period of time. I know some clients are a little bit hesitant to providing their banking details because they think, well, if I provide CRA my banking details, if I owe money, that means they're going to just take money out of my bank account. Typically doesn't work that way. And even if CRA does not have your banking details and you owe them a significant amount of money, they can still find their ways to access your banking details. Reach out to your financial institution, freeze your bank accounts. So, even if you have money owing, they're not just automatically going to go in and take money out of your bank account. That does not happen. Okay. For individuals that have a substantial amount of money owing to CRA and you don't think you can make that payment by April 30th, what we typically advise for clients is that you typically want to reach out to CRA and try and see if they can put you on a payment plan so that it's giving you that bit of that time to be able to make that payment. Under most circumstances, or I should say situations, individuals that are employees that are getting T4 slips, different things like that, T4E, you know, your income tax is typically withheld, and your income tax is typically withheld relatively, a good percentage of the amount of monies that would be owing to CRA. Typically, where you have the bit of the issue with large amounts of balance owing is if you are operating as a sole proprietor, where there is no self-employed or no income taxes being withheld on your behalf. So it is very important, when you are receiving that self-employed income, that you're putting that aside so that when it comes to tax time, you have that money available so that you can make that payment to the Canada Revenue Agency. Okay. And then in terms of, thinking ahead for the next tax year for the 2026 tax year. So while for the 2025 tax year, CRA has reduced that lowest tax bracket from 15% to 14.5 as of July 31st of 2025. As of actually January 1st of 2026, CRA has then gone ahead and further reduced that to 14%. Okay. So again, they've already made that shift into the tax brackets and reduced that reduce that lowest taxable income for individuals. So again, even for a go forward basis, you can be cognizant of knowing that you are expected to have some additional tax savings for the 2026 tax year as well. Okay. So for individuals that are looking for assistance and they're saying, you know what, I don't want to do my tax returns on my own, or I've tried it before, I haven't done such a great job, or for clients again who are used to using our services for the tax returns, we are definitely here to help. So for our existing clients, we will be starting off our personal tax campaign season tomorrow. So that's where we will be sending you the email with the information to complete the info sheet, with the checklists, as well as with access to all of the updated worksheets so that you can start compiling everything and sending that over to our office. And then for individuals who are looking to utilize our personal tax return service this year, you can definitely reach out to us through our website or set up a free consultation by going to our website. And, we can have that consultation in terms of how we can help you moving forward to be able to get those tax filings taken care of. Okay, so let me see if there are any other questions. Let me take a look. Okay, so there are no additional questions. So that means one of two things. And I do see a lot of people stuck around for the sessions, which is excellent. So that means either I did an impeccable job, which that's what
You did.
that's what the
Yes, you
narrative
did.
I'm going with. Okay. I did an impeccable job and I was able to go through everything with individuals. So I was able to answer all the questions. I'm hoping that's what it is. But yes, I mean, even in terms of for the preparation for this year, we will definitely be we will be providing the recording of today's session on our Facebook as well as our YouTube, and as well emailing it to clients. So you can definitely take a look at this. And for individuals that are possibly looking for access to the PowerPoint, I should say, clients can definitely reach out to us and we can have that sent off as well.
Well, thank you, Rachel. Once again, you knocked it
Okay.
out of the park. I
Thank
appreciate it.
you. Thank you.
And we'll see you guys back in a couple weeks with another amazing session. So see you soon. And thank you again for taking time out of your schedule to join us. Have a
Thank you.
great day.
Oh, and bring in your tax returns. The sooner the better. The sooner the
Yes.
better. Oh, someone just said great session. Thank you very much. Yeah, the sooner the better. I always like to tell clients, and I think that's also very important. You know, um, the last few weeks of April are a very busy season, and unfortunately, a lot of clients do drop off or submit their information, towards the latter end of the tax season, which does make it a little bit hectic. I say to clients, the earlier you are able to get your documents together, submit to our office, we can have that tax return completed. Get your refunds earlier. Have your money in your pocket earlier. And again, same thing. If it's a matter that there's money owing, don't procrastinate. Know what that money is owing to
Yeah.
CRA earlier so that you can organize, whatever, getting your money together to make those payments.
And if you do owe it,
So
doesn't mean you have to file. You have to pay when you file. You still have to
that
April.
is true. That is true. You still definitely have time once you know what you're owing to be able to make that payment to CRA. But our goal is that we definitely, want clients to submit that over to us earlier so that, we're not having clients send us the tax filings on April 29th and saying on, 9 o'clock on April 30th, did you complete? Is it done? How much do I owe?
Oh, if I had a penny for every year that happened.
All right, awesome. Okay, thank you so
Thanks
very
again,
much,
Rach.
Andrew. Have a good
Great
day,
job.
everyone.
Bye for now.
Cheers. Bye bye.